Welcome to Cashflow Savannah, episode 50. Chandler, we have the most amazing guest today, Lawrence Manker here. He's a local investor here in Savannah. And man, he is going to light everybody's hair on fire. He is fantastic.
Yeah, no, he super cool guy. We've gotten to meet him up through the real estate meetup that you host once a month. So that has been good to get to know not just him, but everybody at that Cash Flow Savannah meetup. I
Yes.
think people are really enjoying it.
Everyone is an exception, and Lawrence is he's no exception to that exception. But yeah, he has an amazing background story. He's gotten into real estate using construction and construction management, and this guy knows a lot. And he really, very few people buy turnkey real estate and cash flow on it, right? And he knows that. So I just think, he just has a lot to teach in this episode, how he's done it, how he's made his money, and how he continues to invest today. He's really impressive.
Yeah, no, new construction's a different model. That's something I've never really learned about, and I think it's really, especially in today's market, I think it's a really good time to be in. It's like it is a good time, but not. It's kind of a weird, strange thing because our supply is so low, so houses are needed, but people also aren't buying because of interest rates. So it's just a weird, it's just really a weird time. So
Well, in a way, in this time period, in my opinion, nothing works, but at the same time, everything works. It's kind
true.
of crazy. And Lawrence is he's cash flowing on new construction and on
Yes.
construction projects, and so this is the guy we want to learn from. And I just want to say how proud I am of this show because we focus on local real estate investors. And if you listen to the show, you're going to want to grab Lawrence at the next meetup and be like, talk to me. You have some mad skills. He's incredible.
Yeah, for sure. Learn what the market's doing from local people that are actually in the market. So I think that's what's so cool about this is it's people that are actually trying to buy and sell in this market, in the Savannah market to be specific. Um, so yeah, great episode. I enjoyed it.
So stay tuned. We welcome in Lawrence Monker. Welcome to the Cashflow Savannah podcast, Lawrence. We're so glad to have you. How's it going? You doing okay today?
I'm doing well. Thank you for having me. I'm excited to be here, to share my story with you all.
I'm
Yeah,
excited to get to know you better. You have been a very faithful member of our meetup for many, many months, and I always enjoy speaking with you. And we always want to get to know our own local community here in Savannah because that is what this show is about, is talk to us about Savannah real estate investing. So give us a little bit of your background.
My name is Lawrence Minker. I am a native of Savannah, Georgia. I went to Johnson High School, class of 2006. I've been here for all my life, so I love it here. I love the city. I love the community here. I just love being here and just seeing everybody come visit. And I got a lot of family here, so it's a lot of family cookouts. I enjoyed it, and I kind of just jumped into the real estate market, and that's where I've been since 2015. But I'm a very big family person. I have two kids and a wife, and I'm very big on spending time with my kids, my wife, and family. I'm just a lovable person. I just love people.
yeah, so that's awesome. Hey, the question that I want to ask that kind of just popped up. So a lot of people be like, "Hey, get out of your hometown." And I kind of disagree with it because, and this is the reason I disagree with it is because sometimes in your hometown, there's a lot of opportunities just because a lot of people know you.
Right.
Um, is that, how do you feel about that, or do you disagree, agree?
So I agree and disagree. So
Okay.
it's gonna be a double answer. I agree because I tell young people all the time to get out of the hometown, and
Okay.
that's for more of exposure. So I was in Augusta, Georgia for a little bit of time, and I was exposed to a different environment, different culture up there. So being exposed to that also helped me when I came back here to just to have an open mindset. So I wasn't around the same people, same environment when I got back. So I was more looking for investor type of people by being going to leaving Savannah and being in Augusta. It kind of changed my mindset a little bit. So yes and no. And you're right. When you stay, you're able to be around more people and stay connected and everybody grow together, and then you have that stronger bond, the stronger relationships. So yeah, it's a double-edged
Yeah.
sword. So yes, you can get lead and get exposure to different cultures and kind of open up your mindset to different things, but also you can have stronger relationships at home.
Yeah, no, that's one thing. I'm always like, dang, I don't know, man. I just the people I know, you can contact like this massive group because you grew up in the hometown and they, hey, like, how can I help you? What problems can I solve?
For sure.
And they know you, so they want to work with you. To where if you move out, it's like, all right, I don't know a soul here. I got to go like basically start over and like figure it out. It's not like you can just text this massive group and say, hey, what problems can I solve?
Hmm.
So that's my opinion on it. But I just thought I'd ask you since you're like, oh, I grew up here.
Well, what
Yep, yep.
took you to Augusta, Lawrence? And is that where you learned about real estate, or how did you get into real estate investing?
So Augusta, actually, I was in a sugar refinery accident, and I was a part of that in 2008. So I flew up to Augusta for the burn center. So I spent about 2 years up there. That's where I spent majority of my time in Augusta, really recovering. So I was in a coma for 6 months and hospitalized for 8 months. So it was a lot of physical occupational therapy. But that was being up there is where I would say that my interest peaked on being up there because my mom, she had to buy a house, she had to relocate. She pretty much packed everything up and left Savannah. She stayed in Garden City at the time, but left and moved everything into Augusta. And she, she's bouncing around trying to find a place to stay and stuff like that. And I had some interest in it, but I didn't jump into it. We all get the cold feet, but that's where the kind of the interest sparked. I'm like, okay, I'm seeing things differently. My mom have to, find a place to stay. Seeing how rent she has to pay rent, and I'm really getting exposed to all of that. And I was 19 years old at the time, so I was very young. But yeah, that where interest kind of sparked, and then I moved back to Savannah.
Lawrence, let me
Um,
hold you right there because this is a
yep.
lot of people don't know about that. And I'm sure, Chandler, you remember as well when that happened. Can you talk about the sugar refinery blowing up? Because that was a really horrible day for the
Oh
city.
yeah.
And talk to us about the whole, just the event as a whole, what happened there. And we
Oh
still
yeah. So
have a sugar refinery
yeah,
today.
yeah, yeah. Yeah, so that happened on February 7th, 2008. That's when it happened. I was working. I was working at the plant at the time. And I don't know all the detail. Like I said, I was in a coma for 6 months. So I was asleep for 6 months. So a lot of the details I really don't really know, but I can give you what I actually remember.
You know what
Uh,
caused the explosion?
from my understanding, the Chemical Safety Board, when they had came out with their finding, they said that it was a conveyor belt that was enclosed, and it was on a metal bearing, and the belt moves the sugar throughout the plant, and that was one of the initial um, reasons why the explosion happened. So
Well, for our
yeah,
listeners, sugar, from my understanding, after that happened, the whatever comes off of sugar is very flammable. Is that right?
I did not know that until after the accident. But yes, you're 100% right.
I didn't either. We all learned so much, but
Mhm.
one spark just, hit the wrong chemicals in the wrong spot. How do you know how many were injured and how many died in that?
I do not remember.
Oh,
I don't know. Yeah, I know I was the last one out of the hospital, so I have no idea like everyone that actually went to the hospital, and what transpired during that time. I was the last one. So when I got out, everybody that was in the sugar refinery accident was already, moving on with their life, either back home in Savannah or, in Augusta doing surgeries. So I was the very last person to leave. So yeah.
wow. 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 Thank you. I'm sorry to interrupt you, but please continue. I really wanted to just talk about that horrible accident.
No, 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 no. No, that's a part of my story for sure in my journey. Then I was able to move back to Savannah, and this was of course where I was born. And I actually was on a football scholarship at Savannah State. So I actually got my degree in computer science technology. I did graduate. Took me a long time. Just to encourage anybody that's, still in college and, it's taking, 5, 6, 7, 8 years. Just, hey, keep on going on that degree. It doesn't tell you how long it took you. So I pressed through and I finally did graduate in 2015. So that's actually the same year that I opened up my business. My wife and I actually we opened up my business 2015. Quality Coastal Homes is our real estate business. And that's we did our first rehab on Tennessee Street. You never forget your first. You never forget your first baby. Yeah, yep, yep. It was on Tennessee Street. And the way we received the home, it's kind of unfortunate, but everything worked out. My mom and dad, they went through a divorce. They decided to give us the home. And then that was our first home. And that's where, a lot of our capital came from and our journey started from that home because we didn't pay for the home. All we had to do was go and do a rehab. And back then, you can get a home for $80,000. They wasn't expensive back then. And I look at that home now, that same home is worth way more now than what we sold it for. I'm like, man, I want to buy and hold everything now. Like I don't want to sell nothing.
That's
And
right.
early on, I didn't understand like the equity play in real estate of like buying whole and the equity that comes in holding a property long term. I didn't understand that. All I understood is really the fix and flip model. So that's all I really was doing.
Uh-huh.
Yeah, yeah.
So can you tell us the numbers on that first fix and flip you did?
Yeah, so of course we got it pretty much for, it was
Oh,
free. But
Great.
we actually put $35,000 dollars into that home to get it back up and running. And it's amazing because we added a bathroom. Like the rehabs now, I wish I can do a full rehab for $35,000 now. But yeah, it was 35K that we put into it. And we redid the whole entire house. The house was beautiful when we had finished it. I was like, man, I wish I would have grew up in this house because it was actually my childhood home.
yeah.
So and we sold it, I believe it was 89,000.
That's
89,000.
Wow.
That's crazy to say right now.
great.
$89,000
That's crazy.
dollars that we thought we was making. We thought we was doing big things. We making plenty of money. It was like,
You
oh,
were.
we're doing great. We're doing great. But
Tell people what it's worth nowadays over there on Tennessee Avenue. It's
oh,
probably close to
easily
one.
200. Yeah, 200. Yeah, 200K.
I don't
Yeah.
know. How many bedrooms and bathrooms, Lawrence?
It was 4 bedrooms, 2 bathrooms.
That's a $400,000 house on Tennessee.
Exactly.
Yeah.
Yeah,
I
it's
just sold a flip for
it's
375. So
yeah.
yeah.
So I'm looking
Wow.
back at it, I'm like, okay. I talked to my wife the other day. I said, hey, I think we're gonna kind of change our strategy up. Let's try to buy and hold and hold on to some stuff and play long-term games.
Sounds
So yeah. At the time, we needed the equity, so the money at that time. So I think it works if you need to get your
right.
money up and have some cash reserve in play. So I think in that moment, I think that was the correct decision is to sell, get that money, get that cash reserve. And as you can build your cash reserve up, then you can do some more buying holds. So,
Yeah,
but yeah.
absolutely agree with that.
Lawrence, when you say 35,000, is that materials only and you did all the work yourself? Can you kind of just dial in on that 35,000?
So no, I actually hired a contractor because yeah, I
What?
had no idea what I was doing.
I thought you
Yeah,
were going to say
yeah.
it was materials.
No, that was what I'm saying. That was the price for the contractor too. Like that was, but you got to think that was back what 2015? Yeah, 2015. Things were a lot
Get
more
some hate
reasonable.
over this. You're going to get
You
some
think?
haters on this one. I'm pissed off at you right now. I'm like,
Yeah.
Hey, that was a different time. So I like I said, now I just did a rehab and I'm in the 6 figures, and I'm like, where's the $35,000 rehabs at? Like I can't find them.
please, Lord, send that. Please, Lord.
Yes, send them back.
I love your how you say like sometimes you need to start just with fix and flip to get your cash reserves up. I love how Pace Morby he's like, hey, some people are in today's money, some people are in tomorrow money, and then future money. I love those three phases.
Yes.
I like treating them like that. Hey, I'm in today money mode, and then once today money mode, and you have just too much cash, all right, let's go into future mode. So
Exactly. And that's most definitely that's where we're at right now. The company, we're more in that future money mode.
yeah,
We're in that position where we can kind of do some buy and holds
Mhm.
Last year was actually our first buy and hold. I know this whole Airbnb um thing has been going on for several years now, but we got our first Airbnb last year, so I was excited about that. We added
Ooh,
that to the portfolio. It wasn't downtown; it was off of 17 of Quaco, where everything is kind of building up. But we're getting some really good traction. On September 1st of last year was the first uh when we made it live on Airbnb. It's when
Mhm.
we first went off, and we've been doing really good since then. We're pushing to a year now, and we've been almost every single weekend. We've been occupancy. I believe it was last time I looked, it was like 78% occupancy, which is really good, which is really good. So that's going to be most definitely a long-term play, and we're kind of holding on to that. That's our baby right now. Yeah, yeah.
I want to ask, so after your first flip and or fix and flip, did you just
Mhm.
keep doing that, or were you like, man, I need to buy and hold immediately, or did you just keep fixing and flipping?
So so we did that one. We say like, man, that was great. But because it was a deal from my mom and my dad, and I didn't have any wholesalers, I didn't even have in partnerships, I didn't have any of that in place. So I had no idea how to get to my next deal. I wasn't listening to bigger podcasts. I wasn't doing anything at that time. So it was like several years until we ran until our next property. It was more just studying, learning, and I had a lot of cold feet. I wasn't as confident as I am now in analyzing deals and things like that. So it was several years before we got to our next one, which is crazy because our next deal was a foreclosure. And I think we got that one in 2000 and 17, 18, 17, 18. We got our next flip. But the crazy thing is it was a foreclosure, and we initially was going into, it's like, okay, we're gonna flip it. A realtor actually brought it to us. That's what happened. A realtor actually brought it to us. It was a foreclosure. I think it was 150K, if I'm not mistaken. It was 150K that they wanted for the property, but it was a massive rehab we had to do, because for the 150K we put in, they started building it as a new construction. But I think in 2008, somewhere in that time, where the economy kind of tanked, the house been sitting since that time. And yeah, it's been sitting for a while, and only thing was there was the shell of the house. The roof was done, the shell of the house, and pretty much the framing of the house was done. But that's it. It wasn't no sheetrock up. It wasn't nothing. So it was a shell for 150K. And that was our next project. And it was a big project, because when I was confident in my numbers, and I said, I believe this is a great deal. The thing was, it was a seven-figure deal. So we went from doing $100,000 house to a massive deal. And I was nervous as I don't know what doing this deal. But we got into it, and we got to find a really good contractor. He gave us, we got a couple bids, and we found a good contractor, and he did that project. And it took us over, well, typically with new construction it takes 12 to 18 months, which I didn't know at the time. It took us almost 2 years to finish that project. So yeah.
that once.
Huh?
How did you finance that?
So for that particular project, I was able to do uh out of my primary home, I was able to do a cash out equity loan on my primary home. And
What?
also my realtor, she believed in the deal so much, she was actually willing to even partner with me and put money into the deal. So between those two things there, we was able to bring up enough money to be able to pay for the deal. And then at the end of it, I was able to do a HELOC, and then a HELOC, and then uh a cash out equity on that home. And then that's how I was able to pretty much pull all the money back out of that home. And that was our foundation of what we're doing now. That right there deal really opened up a lot of opportunities for us, as far as being able to do. Now we're doing building two new constructions in Atlanta, Georgia, in Grant Hill. We're doing two new constructions, and we just got the permits for the third lot in Atlanta, Georgia. So yeah, We was able to yeah, we was able to kind of scale up a little quicker. I think the market helped us out a lot. I wouldn't suggest that for anybody doing going from a 6 figure to a 7 figure deal just overnight. I wish I would have done a little bit more smaller deals first. There's a lot of praying going on for sure. A lot
Yeah,
of
I
praying
would
going
think.
on. Yeah.
That's a good thing,
Big
though.
reward.
Yeah.
Yeah. Yeah. Yeah. Yeah.
So are you a general contractor now, Lawrence?
No, I'm not. I
Okay.
am not. I still use contractors. I the thing is, I done used so many different contractors over the time. Like it's just hard to find that one contractor because they'll do good like one or two jobs, and then that third or fourth job, it's just like, come on, like we've been doing this too long. Why do we have to go through this time? Because they feel like they're not getting made enough money. I feel like they're charging me too much money. It's always that that's that conflict in between. But yeah, yeah, I'm not a GC now.
Okay, so
Mm,
you hire local contractors that are licensed and then they pull the permits and you're
correct.
overseeing the project with your company. Is that right?
That that's correct. That is correct.
Okay,
Yep.
so maybe inquiring minds want to know, do you offer these services here in Savannah? Because some of us need rehabs in our portfolios. Talk a little bit about that.
Um,
Just for
you
your
mean
own,
like
are you doing it for own properties or do you do rehabs for other people as well?
no, I only do it for my own properties. I
Dang.
haven't yeah, it's a lot of work.
Yeah.
It's a lot of work managing, people in general. It's a lot of work. So yeah, I'm really it's just a two-person show from it's just my wife and I right now. We don't even have anybody else. We're actually thinking about hiring somebody this year because we just got finished doing two more rehabs. But the way I structure my business is most of my deals I always have partners. I rarely go on a deal and tackle it myself. Like we had a deal in Virginia Beach that we did. I had a partner. He was up there. I bought in. We was a 50% partnership. I bought in half the money. He bought in half the money. I came in with the down payments, the monthly payments with the hard money lender, and he came with the sweat equity. So that's the way we structure that deal. So typically, most of my deals, even my deal in Atlanta, I have a partner up there. Like he's up there. I have a GC, of course, but outside of my GC, I have a partner that's up there. So yeah, I typically always partner with somebody in order to take a deal down. So me doing, and a lot of people are like, oh, they want to be independent doing themselves. And I learned, on my first project, trying to do it myself, it's so much easier to have partners because now you have another mind, somebody else that you can converse with to like extra strategies. Like you just got another set of eyes on the project to help you out. So most of my deals, I am all about partnership. I am all about partnership. Like right now, we're in the middle of supposed to be closing. We're supposed to close tomorrow, on a new construction deal, but the closing got pushed back because the lending and stuff like that. So it's going not to be till like July 1st, July 2nd. But also I have a partner, Building Wealth Investment Group. That's a company that I partner with in order to tackle these deals down. And RLB Solutions is another company that I partnered with. That's Ronnie and Leah. So it's always we got one on 52nd that we got on the market right now. That's a partnership that I have with RLB Property Solutions. So yeah, I'm all big on partnerships. I'm big on partnering with people to tackle deals down. That's the best way to do it.
So what's the key to a good partnership?
Mm.
Mhm.
The key to a good partnership is having those tough conversations up front.
Okay.
Going to iron all of that stuff out up front. I'm the kind of person, if you're going to be 50-50, and all the structure of it depends on, you all, like who's bringing in the equity in, who's going to do the sweat equity, who's going to bring in the financing. Anywhere you do 50-50 split or 60-40 split, it's really up to you all and what y'all comfortable with, but also having a conversation about, okay, if we know we get stuck in this property, what happens? Typically, if you want to structure it like, okay, if I brought in the money equity, and I'm going to, if we both bring in money equity, one of us got to either go get paid out that money equity in order for us to buy out the home, or we're just going to split the home 50-50, and we're going to become a rental if we can't sell it. So it depends on the exit strategy, but talking about those things up front eliminates assumptions on the back end. And that's how all my partnerships, we're still friends. Like we aren't enemies at any point in time because we had those conversations up front and we understood worst case scenario if we couldn't exit or sell it, or if we were going to do a buy and hold. We understood what the expectations was up front, so that eliminated a lot of conflict on the back end of the deal.
I
So,
got you.
yeah.
You've done a lot with not a lot, Lawrence, and I don't hear any excuses. I just hear how you figured it out. Like, I really respect your hustle.
Yeah, for sure. I mean, well, of course, y'all in the real estate game, problem solving is probably the number one attribute that you have to have. Like, you have to develop that as a habit. Like, making excuses is not going to solve the
No.
problem. It just is not. And of course, you run into little hiccups, you run into problems, and like you can't X out a property when you want to. You're holding on, your hard money loan is about to balloon. All these problems are real, but what is the strategy? It's always something that you can do to kind of exit out. Yeah, you may take a little hit, but that's why you do a buy and hold. You hold it for a little longer and you make your money long-term wise. 10, 15 years, if you hold on to it, you're going to make that money that potentially if you would have sold it you would have lost. Or, some people, like some projects, if I'm going to take like a $2,000-$3,000 hit, I'm gonna go ahead and take the loss on it. Instead of trying to hold on to it and try to just make that $3,000-$4,000 back. I prefer to take the loss and just move on to my next project and I get the money back out. So, depends on the scenario. So all of that is real. Investments is risky, but you calculate your risk. It's all about calculating your risk. So, and then solving it. So yeah, I'm most definitely about, I think that's what my wife and I, we got good at doing is solving problems. That's pretty much it.
Have
There
there
you go.
been any opportunities that you and your wife have said no to? And tell us why, if so.
Uh, Yes. Yes. We said no on deals wise, we said no on them. When we run our numbers and we look at them on the acquisition side, and we see that it's just like no way to exit out. Like, you can't do a buy and hold, you can't do a rehab. It's just no way. It's just unfortunately, and then the seller wants astronomical numbers for what they believe because there's emotional attachment to it, and we understand how it goes, and we don't want to we're here to make money. We're very transparent. We're here to make money. The reality is, when I do want to hire people, I have to make money to pay them, and if I'm not making money to pay them, they got kids, they got family, so it's a trickle down effect. So yeah, we say no to deals that just doesn't make any sense. If the numbers pencil out, and they make sense, we're willing to jump on it. We're willing to jump on it. And I think what's good about us is we're able now to do new construction. We're more comfortable. Last year was our first year doing new construction. We never really kind of done new construction, but now we're able to kind of do new construction rehabs and be able to do different extra strategies now with rentals, also with the short-term rentals. It put us in a position to be able to really do a lot of deals and diversify ourselves. So when people are coming to us with deals, we're able to kind of tackle them. And like I said, I use partners with most of my deals. That helps me out. Like I said, my building wealth group, that's 5 men. That's 5 different men that we all came together and we put all our money together and it's in this account ready for deals. So because of that, that put us in a position where deals come across the table, we're able to act on them. And we also individually do deals. So if we have deals that we're building wealth can't do it, we'll kind of dish them out to individuals like, hey, if y'all got enough cash, to be able to handle this deal, analyze it. If you like it, take it down the deal. So having the community is so important. That is very important.
So tell us a little bit about this new build strategy. I'm interested in it.
Mhm.
I don't think it's a bad strategy right now, especially with supply just being so low. I think it's really good. It's just now you got to add in lot numbers and all that. Tell us how
Mhm.
you do all that.
So that you're 100% right because of the shortage right now of homes. The new construction is where it's at, and how pretty much we tackle them down. It depends on whether or not if you're doing new development like development or you're doing more than one home. It's the process a little bit more. It's a little bit more difficult, but how I I lower the risk is I may only build one home or two homes at a time. Instead of trying to do like 8 homes at a time in a development, I only do one or two homes, sell that one, and then move on to the next one. So the whether you're doing one lot or two lots, the structure is the same. So you have to go through your permit, and you have to go through the city, of course, and making sure that you can pull your permits. It takes a like in Atlanta, for instance. Savannah hasn't been that bad. When we did the permitting process, but in Atlanta, it can take 6 to 8 months for the permitting process, and you ain't even built anything yet. You're just trying to get your permits approved with your architect plans, of course, to be able to build that home there. So you have to make sure that you know where you at location wise to know how long that permitting process take. So that's you just got to know that uh don't get a loan, hard money, because I do have a hard money on loan, but I'm only paying interest on what I borrow. So don't go get a loan that you have to pay interest on the loan, even whether or not you borrow money or not. So I can't remember the exact name of that loan, but it's a certain loan that you can get, but you don't pay any payments. You don't pay any interest only payments month to month until the loan balloons. But when you do that, they give you like a 3 to 6 months grace period. And if you know your permits may take longer than that, it's probably better just going to do the interest only loan, pay less money on the monthly than stretching it out with no interest only payments month to month. So the way you structure them, you just got to kind of know that your time frame wise, how long it's going to take. But after you get your permits, it's pretty much a rehab from there. Your contractor pretty much take over from there and do everything. The difference between a rehab is you're going in doing your kitchen and painting stuff. It's the structural stuff, the foundation. Your contractor's laying the foundation. He's putting the framing up. Just pretty much that, all those beginning steps before you get to the rehab. And because like once he finish all that foundational, mechanical, plumbing, his electrical and stuff like that, pretty much is a rehab from there. And some of that stuff is rehab, and I get way more comfortable in that phase because I'm comfortable in the rehab space. And it's the same. It's just the process takes a lot longer. Whereas the rehabs, you typically in them 3 to 6 months, whereas the new construction can take anywhere from 12 to 18 months. It is a longer return on your money cycle wise. It takes a longer time, so you need to have cash reserves to be able to handle it. But it's most definitely, it's been rewarding.
Where are you getting those architectural drawings, Lawrence? Are you buying those off of the internet? Are you paying an architect to draw them by hand? Where are you getting those?
So yes, the architect plans that I got from Atlanta, they was already drawn for me by the previous owner. So he already had them approved a while ago. Now
Okay.
the one in Savannah that we don't, we actually, yes, we hire an architect. He draws up the plans. We submit them to the city of Savannah, and they pretty much say, hey, I think we had to ask for a variance because the lots are narrow where we want the bill, so we have to ask for a variance. But yes, we once they're approved by the city, we're good to go. They approve the home, and we can start the process of building a home. You gotta get a surveyor out, and they have to stake the land and stuff like that. But yeah, so yeah, we get an architect to draw them up for us.
So, are you building these homes to have multiple exit strategies to where like, all right, I'm not building this massive home, so when I rent it out, it's making $2,000 a month and it's a $800,000 house. Are you building them like how are the exits? Because what if it doesn't sell? I've seen that.
Great question.
On that.
Yes, yeah. So yes, I am building them to sell. That's my initial thought process, is to sell them. If I can't sell them, yes, the next exit strategy is a buy and hold. And the good thing about new construction, and I might give my secret away here, but it's okay. New construction, after you buy the land and then you build it, or your contract to build it, typically you have equity already in that home because you're selling it at a higher value than what you built it for. And because I know that, I can run my numbers in a way where I'm like, I'm not going to do a cash out refi on the whole amount of what the ARV or the value of that home is. I'm only going to do the cash out on the amount of funds that I put in. So say for instance, if I'm just hypothetically speaking using numbers, $50,000 for the land, it's $100,000 to build a house. So I'm all in at 150, but I can sell a house for 215. I'm not going to do a refinance or a DSCR loan on 215. I'm going to do it on 150 that I purchased the home for. So that what me doing that's going to give me a lower mortgage, and that's going to be able for me to cash flow on that home if I had to do and buy a home. So that's how I kind of tweak the numbers.
I
Yeah,
like
yeah,
I
yeah,
like it.
yeah.
Are you building homes for 100,000?
No, no way, no way. That was most definitely an example.
That's not great.
And I
You
wish.
really added him. He sounded so smart. You're like, whoa.
So what is
No,
it
no.
typical, like how much does it typically cost to build just a standard?
Three,
I don't
two.
know, I guess it depends on what all you put in it. Let's just say like a standard house. Like
Yeah, so you do a 3-2. 3-2 around 18. Well, no, that was 1,300 square feet. 3-2 around 1,300 square feet. It's going to cost you about 160 to 180K, depends on your finishes and stuff like that. But
so
yes,
that's like bare minimum finishes, or is that kind of in the middle?
that's bare. 160 is going to be bare minimum. Like you just basic everything. You putting vinyl on. You're not doing hardy plank. It's just like bare minimum. I'll typically like we doing the hardy plank on our homes for our buying homes because they're a little more expensive, but it lasts. It lasts a lot longer than the vinyl siding. So, but yeah, for the bare minimum, about 160. Yeah. Yeah.
I
Well,
like it.
I'm going to throw you a hard one here. I think it's hard. So I'm an agent and I only work with investors. And every
Mhm.
day they want to buy a house in Savannah that's inexpensive, that needs a rehab. I've done it myself. It's a great strategy. But they always go, well, I need to know exactly how much it's going to cost me to rehab the house before I even place an
Right.
offer on it. And it's like, it's almost it is impossible. I'm just going to say. So what is your answer to that question? Please save my career, Lawrence.
This is how I go. Out of all my projects that I've done, I have 0% of them has been on budget. Like what I expected to spend.
That is going to be a social media like blurb forever on Sid Was Here. Say it again.
What?
Say it.
0%. But how I combat, I'm a problem solver. So what did I do? Now, early on when I first started, I would literally do a 10% contingency on all my projects. All of them. I expect to spend. I don't tell my contractor that. Now, I never tell my contractor that I have, contingency with more money. I don't ever tell them that. But I personally, on my spreadsheet, I put a 10% contingency on whatever he quotes me. I already know I'm going to go 10% over. Now, as time passed, like now, I do 20% because the way the market is right now, I had to adjust that 10% just was not covering it. And I'm like, okay, I need to underwrite my deals differently now because this 10% rule is not working anymore. So now I'm doing 20%. So I would suggest when you get a quote from a contractor and they say, hey, this is what it costs on your backside, just put an extra 20% and see if the numbers work. And if it does, then you got a 20% buffer there where if you go on the walls and you got knobbing tube or something, like you just don't know what you're going to run into. You got mold that you didn't see. It just things just behind the walls that you don't see aren't unpredictable. Typically that 20% is going to cover you. So that's more realistic. Now I have that project where I did a 20% and I'm over that 20%. But majority of the time, 20% is where I've been at. And I don't normally don't go over that 20%.
Okay, but just a follow-up question. So a property, let's say a property right now hits the market, $75,000. You know it's going to sell quick. You've got to get it. But are you getting a contractor in every house before you even make an offer? There's no way you are. So what is your answer to that?
That one, if all I need to know is the ARV. And if I just can get a ballpark what that ARV is, well, what's selling after repair value, what's selling around that area. And like you said, if it's 75K and I got an ARV of 250, 275, where I'm like, man, that's almost $200,000 worth of equity. I know for a fact you can kind of do about $125,000 worth of rehab and get just about most homes done in that and look nice. And it looks nice. I'm not even trying to even get in there. I'm just going to put an offer in. But I have not seen that in a very long time. So,
It
but
happens
yeah,
that I always personally call me crazy. I always plan on 25 for a kitchen, 15, and we're talking
exactly.
thousand, not dollars, but 25,000 for a kitchen roughly. And these aren't giant homes. You understand? I'm looking at just regular houses and regular neighborhoods. 25,000 for a kitchen, 15,000 for a bathroom, 5,000 for flooring, 5,000
Yeah.
for paint. What are your thoughts? Like that's how I think. I'm like, I'm just gonna generally put in some numbers and I'm going to expect I'm with you at least 20% higher.
Mm-hmm.
Thoughts on that?
Yeah, that's is the perfect way to approach it. That is the perfect way to approach. I have a little cheat sheet myself where I've been seeing in, like I said, you have to go by your market because Savannah market is going to be different than Atlanta from other places. The prices of stuff is going to be just different. But that's typically how I will approach it too. I will just look at, what typically I spent on my previous projects, on the kitchen, on the, if I had to remove the floors or roofing, whatever it is, I would do a generalized, pretty much allotted money for that particular item, and then that's how I get how much of my rehab is without, especially contract. They don't want to be going, 5, 6, 7 houses. They're already busy right now.
They're
It's a
not
lot of
doing it.
contract. Yeah, they're not going. You call them, they're not even trying to go to your house. So you really do have to kind of make a ball eye and like eye view of how much everything is going to cost. And typically, like you said, if you got like that cheat sheet, you're pretty much going to be somewhere in that area, and you'll be on the safe side.
You're making me feel better because contractors have told me unless the home is under contract, I'm not going to waste my time even going over there. And my guys, we just pay them now. We just offer to pay them, but and they deserve that. Frankly, that's a lot of time to give you an exact quote. And
Yep.
people always want
Yep.
to work for free, but why would they walk over there when you don't even have the house under contract? And in this business, it's about speed. The best
Right.
deals are going quick. You have to understand that it's a deal, first off, and you have to move quickly. You can't sit for 3 weeks begging a contractor to go over there before you even write an offer.
Yep. Yep. That's 100%. That's exactly what I do. If I got like a house that really stumped me and I'm like, I cannot get a good rehab, I literally would pay my contract. I'm like, hey,
Yeah.
here's a couple $100.
Yeah.
Come over here, please. Give me
Yeah.
a solid quote
Worth it.
because yeah, it's worth every penny because it's either trying to me doing a rough estimate of it and then I'm, $30,000, $40,000 completely off. How we're going to spend a couple $100 and get him and give me a definite number. So yeah, it's worth the pennies. I don't do it for every project because
Right.
it depends on how deep the rehab is. And if I run into issues that I'm like, well, I never, like we just ran into a knob and tube. I've never ran into it before. And I'm like, oh, I didn't know it was that expensive to do that. But because we ran into it, now that I know around how much it costs, I'm more comfortable now kind of quoting it myself. Whereas before I'm like, hey, I need you to quote me this. Like, I don't know how much this will cost. So yeah, I agree with you. I 100% agree with you. Yeah.
Lawrence, have you seen? So I talk to a lot of contractors. I try to just kind of pick their brain to kind of understand what they're spending money on and all that. I've seen some contractors like, oh, I just use this app to kind of like scan everything and it like spits out a quote. So that might be something interesting for people listening. Uh,
Yes.
People are starting to use technology now to like not like obviously don't just scan it, but they go, all right, I need 6 cabinet boxes right here. How much is it going to cost me? So I thought that was like really cool. Some of them starting to use technology to get quotes, and maybe people that are listening can dig a little deeper. I haven't dug deep into it, but I know some contractors are going that route. So
That'd be awesome. I haven't personally heard that, but
I know there's some
once,
apps out there already
yeah,
that are like just for general contractors to give good quotes. But shoot, you don't even have to be a general contractor to use it. Just use it yourself and get really
I,
good at it.
I was thinking the same thing. I'm like, I need to go download that app. I need to go figure out what that is and download it because it actually would speed up the process, like Julie was saying. Speed is key. Yeah, yeah,
While
yeah.
you're
I
like
know.
looking at the property while doing a showing and just be like, all right, let me scan this thing real quick and get it. I just
Mhm. And
like,
it's probably be helpful for the contractor if you can scan that stuff and send it to the contractor. And when they get a little bit of time, they can say, "Oh yeah, that's exactly what I would charge for that based off the pictures that they see and stuff." It probably can make the whole process a
yeah.
lot
So
smoother.
that
Yeah.
was one interesting thing I got recently from a contract. He's like, oh, I'm using this app, dude. It's the best thing ever. And I was like, huh?
We need
And
to put that in the show notes, Chandler. Do you remember the name? I just looked on the
no,
app.
I don't remember the name. I didn't. I was just conversating with him, and I was like, "That's a really good idea." Like,
Now.
especially if you're just trying to get numbers yourself.
Yeah, that's a great idea.
Well,
So
and a GC app is one thing, but if you could do it for a real estate investor like ourselves, where we're not going to be the contractor, but just to give a good overview, like, hello, great
it's
business idea there.
yeah, it gives you a little confidence. Like, all right, I feel a little bit better about this. So I thought that was cool. A cool nugget for people to use.
Like, great.
Yeah, yeah, for sure, for sure.
So
Wow.
other than new builds, you got anything else going on? Like,
That's it. I got, like I said, the new construction, I got going on, and then I got three on the market. Of course, I have
well,
the two new constructions in Atlanta. They're on the market.
I want to ask, like, how's the market been for you? Has it been slow? Has it been like nerve-wracking?
It's
What's
it's been slow for sure. Yeah, it's been slow, but it it hasn't been like unusually slow because I'm and Julie, I think you can help me with this. Typically, what I'm hearing is, around that, 45 to 60 days is when things are leaving. It is a little slower right now for things on the market. And right now, I believe it was like 35 days for all my properties on there. We're getting a lot of showings. We're getting a lot of feedback. There's no offers. So we're kind of waiting. We're just kind of waiting for that offer to come through. So yeah, it has been slow, but I think with everything with the election and stuff is expected. Like I'm not surprised. So it wasn't nothing that surprised me or anything like that because I know how typically around this time how things go. So yeah.
Well, let's talk about the market real quick if you're open. I love to talk about the real estate market. So
Yes. Yes.
you've led us right into it. Right now, it's late June of 2024, so everyone's aware. I'm hearing conflicting things on the market I think are very interesting. I agree with you, Lawrence. Things are sitting a little bit longer than I would expect them to. Although the good deals are gone immediately. I can't say
Facts.
that enough. And I want to just really correct some opinions because I have this fight about 4 times a day. Something that's on market is not a comp. It's not. It's that I don't care if it's a rental. I don't care if it's for sale. Thank you, Lawrence, for agreeing with me. I'm
Yes.
tired. I'm sorry, but I put in a lowball offer last week and it is a solid offer. It's less, it's like 8% below ask, right? And it's the house has been for sale for 48 days. So we go 8% below. They go, well, there are two other condos in the neighborhood that are for sale for even more, but they're not selling. They're
They,
sitting even longer than yours. That's not a comp. Just because it's
yes.
for sale, I can offer this house for $4 million on market right now. Does that make it a comp? No.
Nope.
That makes
Yep.
me an idiot. Okay. And if I don't let the price drop as the time goes on, it's just going to sit. So just stop thinking on market equals comp. Sold and rented equals comp. On market, that's just a suggestion. What a property is worth is what a buyer will pay, period. If no one is giving you that amount of money, that's not what it's worth. It's what a buyer will pay. And so many people and sellers don't get that.
Yes.
Now, we are expecting at least one rate cut this year. Please, God, let it be soon. My lines of credit are
I
killing
thought
me.
they cut them.
I'm at 9.25 on my lines of credit. I'm about to kill somebody. But yeah, they're supposed to drop. But what I have heard is that ever since whatever the Fed chair's name is, escapes me at this moment,
Jerome Powell.
Powell, as soon as
Mhm.
he said that, people actually went into buy mode because they're expecting things to kind of blow up once the rate drops. So there's a lot of people, there's two different camps. People sitting around waiting for rates to drop, and then they're going to go in, which is going to make prices go up and negates the whole point. And then
Yep.
other people that have said, let me just go in now while the rates are where they are and get a discount compared to what I would pay 5 months from now. So I've actually seen both camps on that. I'm a buyer's agent primarily. So what are your thoughts on that, Lawrence? You agree? You disagree? Tell me I'm wrong. Bring it.
No, I 100% agree with you. In the residential market is most definitely what is sold. Even like when I'm doing my underwriting and I'm looking at other properties, I do take a glance at what's on the market. But the reality is, if that area is not sustaining the price value by sold, not active, but by sold properties, I do not use it as a comp because the reality, especially with the interest rates, you don't know which way it's going to go. So you only can use what has been sold in. And I used to go 6 months back. I don't even go 6 months back. I normally go 1 to 3 months
Three.
max.
Max of three. I agree.
Max.
Not a comp. If it's more than 3 months out, I get rid of that. It's gone.
Yep. Yes,
I
it's
don't care if I have
gone.
two houses to comp with. Those are solid comps.
Yes, yes. So yeah, I 100% agree with you. That's the market we in. So you have, like you said, you have to adjust with the market that we're in, and you got to be able to move with it. And I think that's the biggest thing. Being an investor, you have to be able to adjust with what the market is giving you, and you just got to respect it. That there's cycles in the market, and you got to be able to adjust whatever cycle it is. You got to be able to kind of move with it so that you can, longevity wise, you want to be doing this 10, 15, 20 years. So you have to be able to identify that this is the current market that we're in, and you
Yep.
got to do what you have to do in that market. Yeah.
Well, and for my buyers up there, I love you. I love being a buyer's agent. Be okay with sitting on your hands. Okay. If we can't get you a reduction, which would make your numbers work, don't buy it. And I tell people, I was telling a lady this weekend, I really enjoy working with her because she walks away all the time. I've written 3 offers for her. I don't care that we've lost all 3. I really don't. That's me doing my job. I'm going out hard for her for a price reduction. She's having a hard time getting it. And I, as her agent, am saying, it's okay. Sit on your hands. That's what I would do too. Let's wait till we find a hungry enough seller to allow a sale that your numbers work. Don't buy it if the numbers don't work. It's really okay.
That's awesome. I commend you on that. That's really setting up people for success and having the interest of other people first. And I commend you, Julie, for that because some agents. Well, I commend you for that because that's the way it should be. It shouldn't be about the money or the amount of money that you're going to make. It should be, of course, that happens, but it should be about that person first. And that's the whole purpose of being an agent is to put that person first, making sure that they're getting the best deal possible in the market that we have.
Right. I'm in this business to help people, and I'm
Yeah.
specifically in this business to help investors. And if all I'm thinking about is if I get paid or not, and I don't get paid for those 3 offers, I don't get paid, but I don't care because I'm a long-term girl, and I know both of y'all are too, right? This buyer, this is her
Mhm.
first purchase with me, but I want to do a good job for her so she buys more. I have so many buyers that have bought 4, 5, 6, 8, 12 houses through me. We have that trust set up and they know I'm always going to have their back. I am not about that commission. That is absolutely not what I'm about. It's that long-term relationship. That's where the value is. And real estate is a relationship game. And I can't tell you how much I've gotten out of my relationship with Chandler. We've learned so much together. We've taught each other things. All my buyers, all my owners, and getting to know you, Lawrence. I've gotten so much out of that. And for me to go, hey, let me extract 20 bucks from Lawrence and never see him again. Who cares? That's a very short game right there.
100%. 100%. I totally agree. That goes back to that partnership and that relationship.
Yeah.
Like keeping that partnership relationship is way more valuable than
Right.
the few pennies that you're trying to squeeze out. Yeah.
Well, and speaking of your partners, Lawrence, tell us a little bit about your group. I'm curious to know how you got together. You kind of told us about your structure, but also let's say, I do want to hear about your group, but at the end, and you say, hey, this 123 Main Street, Joe, I want to keep it. How do you exit that with that partner? Can you talk a little bit about your group? We'd love to hear more.
Okay. Yeah. So it's a 5-man group. We all went to Johnson High School. Yeah, we all went to Johnson High School. So we're childhood friends. So we all kind of got linked up. We all had an interest in some type of real estate investments because we're not just a real estate investment. We're more investments in general. We are open to just about anything that we can invest into. We're all about generational wealth. Bringing the scripture that come to mind is a wise man leaving inheritance to his children. That's going back all the way to his grandchildren. So that's our mindset is being able to leave inheritance to our children. That's our mission. That's our goal. And we all came together and we put all our money together and we been stacking money up over the last two years. And we're actively now ready to buy. We're actively ready to buy. Like the new construction I was telling you about in here in Savannah, that's actually Building Wealth Investment Group. That's actually our deal we're doing together amongst us. And we should be closing on that in next, like I said, next week. But it's 5 of us. It's myself, Ronnie Bang, Alonzo Brisbane, Paul Hussichin, and also Anthony. We all got together and we all came, and not just real estate, also stock market, real estate. That's something stock market is actually
Share,
what we're doing.
share.
Yes, yes. So we came together, and it's amazing because we come together and we work it out. Like I said, some partners you just kind of just, even if it's conflict, we're able to figure it out, move forward, and still be friends and keep moving forward. And that's the type of group that we have. We're able to sit down with each other, talk it out, and figure it out. And that's been our success doing this in the group. And we've been loving the process.
That's a
We've been
cool.
love. Yeah.
Most people's egos get kind of in the way, and they're like, "Oh, I want to be right." Where y'all can kind of say, "Let's talk about it," and then get a drink after this, and we're good to go.
Yeah, and my one of my favorite sayings, and we say it in the group, is there's enough fish out here for all of us to eat. There's enough out here. Maybe I get this deal right here, then you get this deal, but it's enough. We're all going to be able to eat. There's this market has been here before us. It's going to be here after us. There is more than enough. And like you're saying, having the people with the same mindset, understanding this is a long-term thing and not just get a quick dollar right now. This is not what it's for. That's what your 9 to 5 is for. If you need to pay your bills and stuff like that, that's what it's for. But this group is to be able to build generational wealth.
That's
And
awesome.
I think having everybody understanding that concept, we've been doing really well, and we're excited to be able to break ground on this new construction for sure.
So if you wanted to keep the house in Atlanta that's not selling, you and your wife, how would you exit out of that with your partners? Assuming they're in it, I don't know who's in it, but
Right.
what's that process like to
So
exit?
I already had the conversation with them because potentially it's reality. We may have to keep the properties. So the strategy there is, which we already had a discussion about it. That particular structure, that deal is 15%. So I will pay him out the 15% of what he owed, and I will buy him out. I'll pretty much buy him out of the home, and then it will come on the Quality Coast Homes. That is one way we can do it.
Wait, so I want to understand, Lawrence. Let's say he has 50,000, 50,000 into it. Do you go 50,000 plus 15%? Is that what you're saying?
That's
Okay.
fair. Yep, plus 15. So if whatever equity you have in there already, that automatically comes out because that is pretty much expense. And then whatever the profit is, you get 50% of the profit. And then that's how you come up with whatever, the percentage that you get. And it's a buyout. That's all it is. You just buying them out. Or if you don't want to buy out, then we'll do the second option is some type of agreement with, we hold on to it, you manage the property, and we split the whatever the cash flow is. So you have that option too. So it depends on it depends on the person. The person needs the cash now, they're going to take the 50%, get the cash, and go ahead and get out the deal. Or if they want to play long game, and then we can sell it, and then we can still do our split like we originally had when we sell 5 years from now, then we still do the split. And it's still a win-win for everybody. So it depends on the scenario. So it's almost like options. We have options. So we don't feel like like our back is getting the wall and we're trapped and we're forced to do something. No, you have options. Whatever option you want to do, that's what we do.
Cool.
So,
Wow. Well, Lawrence, you made my day last week. I had a long drive back from Tybee, and you called me. It's a pleasure speaking with you. You know your stuff in real estate. I mean, you've absolutely established that you bring a lot to the table. You have a new venture in real estate that you're embarking on. Tell our listeners, we want to get you some business. If you want to work with Lawrence, what is your new thing? Tell us.
So it's as official. I actually passed the Georgia real estate license, so I am eligible to be a licensed agent in the state of Georgia. So I am excited about that. I am most definitely excited. I'm still trying to figure out, what that's our conversation. I'm trying to figure out, what's the best route to go to. So, but I'm most definitely excited about that new journey, be able to help out homeowners. And I'm just hearing you talk. You're an agent that I would like to model myself after, because I want to be an agent that really put the people first. That's what my desire is. So just hearing you and being new to the game, I've been in real estate, but being an agent is a totally different new thing. So it's a whole new thing that I have to learn. So I'm coming in as a novice So I'm trying to, understand that process and understanding that side of it. So yeah, I am excited to be able to enter into that arena.
But Lawrence, a monkey can write a contract, right? That's what you're a novice at, is you haven't written a contract, for example, but you
Yeah.
have so much background that's going to be an asset to the people that you work with. And I've been, you can do what you want, but I was like, please work with investors. Like there's such a need in the agent space for someone that really understands investing. And with you knowing your background in construction, like I just can't say enough what an asset you're going to be to your clients, whether they're buying for themselves or for, an investment. But I'm
Mhm.
so excited for you. So you haven't selected a broker yet, but that's the next step. Is that right?
That's correct. That is correct. Yep.
Well, I'm positive that by the time this comes out, it'll take a few weeks, but by the time this comes out, you are going to have that license hung somewhere. Just for our audience, you can't be a license agent without signing up with a broker. You have to hang onto their license. So, Lawrence, I'm sure there are so many people that are going to hear this episode and be like, I want to work with Lawrence. If they're anything like me, they buy total pieces of junk, rehab it, and then they rent it out. So, can you give our audience, how do they get in touch with you? They want to use you for their agent, they want to get to know you better. What's the best way to get in contact with you?
You can contact me on website www.qch.qualitycoastalhomesga.com or Instagram _qualitycoastalhomes, homes with an S underscore, or on Facebook, Quality Coastal Homes LLC. Lawrence Minker on Facebook. And you can connect with me any of those ways. I'm most definitely available. And I'm all about partnership. I'm looking forward to partnering with people. Yeah.
And I'm going to give a shout out to our meetup. We meet once a month, and Lawrence
Yeah.
almost always there. And
Yeah.
we really appreciate your support. I hope you've gotten a lot out of that as well.
I have. Thank you so much.
Absolutely.
Well, Lawrence, we appreciate your time today, and let us know if you need anything.
All right. Thank you so much, Chandler. I
We're going to
appreciate
work
y'all.
together. We're going to work in the future, Lawrence. All three of us.
Yes, let's
Do
go.
something,
Let's do it. Let's do it.
and we'll do another podcast about that.
Yes, there you go. I love it. I love it.
Thank you so much.
All right. Thank y'all. Have a blessed day.
Thank you.